Since the summer, Michael Saylor, CEO of MicroStrategy, has invested over $1 billion of the company's funds in Bitcoin, making it the first publicly listed company to hold Bitcoin as part of its Treasury policy. We have a lot of ground to cover since our last interview that we did in the summer. Please welcome back to the show, Michael Saylor. Michael, happy to see you again. Welcome back.
Thanks for having me, Danielle.
Yeah, well, I want to congratulate you because, I had spoken to you, I believe, the week that you decided to move your company in the direction of Bitcoin. It's obviously been an incredible decision thus far, and you've become really a celebrity in the crypto space. You've been dealing with the newfound celebrity status here.
I'm happy to be a member of the team. Actually, there are a lot of people that were carrying this banner of Bitcoin for many, many years before me. It was a lot harder to be a Bitcoin advocate in 2017, 2019, 2013. You had to have a lot more vision. You had to have a lot more conviction. 2020, after March, it became a fairly easy decision. The entire world had a problem of monetary expansion. If you're an engineer, you look for a technology solution to a problem. There are a lot of non-technology solutions to monetary expansion. I mean, gold is a 5,000-year-old non-technology solution. And now Bitcoin is the technology solution. I had 10 years of experience. I could look back on what all the Bitcoiners have done for a decade. And I just had to make a guess, which is the rest of the world going to be rational and look for a technology solution to their problem? And I don't think it's an irrational thing to bet on technology in the modern era. So that's what Bitcoin is. Great monetary technology.
Very, very humble response, Michael. Well, since we spoke, Bitcoin obviously making new all-time highs, attracting a whole new slew of investors, but also attracting the attention of and regulatory bodies. So, before we get into other matters here, I just want to talk to you about some current events here. What do you make of the FCA, the ECB's Lagarde, and now recently Janet Yellen coming out warning people about potential dangers of Bitcoin, of how it's used to fund, for example, terrorist activities? What do you make of all this?
I think what's driving the Bitcoin market is institutions. And institutions are bringing billions and billions of dollars to Bitcoin because they want to store value against monetary inflation. Everybody's buying this Bitcoin on regulated exchanges. They're storing it with regulated custodians, and they're doing it subject to AML, KYC regulations that have been in place for a long, long time. Not anybody that's buying Bitcoin right now that isn't expecting to do it on a regulated exchange subject to normal regulations. And the fact that AML, KYC regulations apply to bonds, Apple stock, Tesla stock, and other types of assets hasn't kept them from having value. So I think the summary here is we're going to find conventional AML, KYC regulations applied in Europe and the United States. And everyone that's buying Bitcoin and holding Bitcoin as a monetary inflation hedge is going to find that to be acceptable. And this is much ado about nothing.
So you don't see it as a threat to Bitcoin down the line, Michael, if governments are going to start being more vocal?
If I wanted to take $1 billion of Tesla stock and wire it to a private wallet in sub-Saharan Africa, my bank wouldn't let me. That doesn't keep me from buying Tesla stock, right? If I wanted to take $100 million worth of farmland in the middle of the United States and wire it to a private wallet somewhere in Asia, that doesn't, the government wouldn't let me. I can't physically do it. It doesn't keep me from buying farmland as an inflation hedge. People are going to buy Bitcoin because it is great property in cyberspace as a monetary inflation hedge. If you actually put regulations on it that are anti-money laundering regulations, or you put regulations that have to do with know your customer to prevent using it to finance any illicit activity, it's not going to undermine its value as property because it's the most pristine, highest quality property in the 21st century. People are going to buy it. There are going to be regulations that'll vary from country to country, and I think it'll be just fine.
Okay, but don't the regulations go against the essence of what Bitcoin was created to be?
There are going to be some people that aren't going to like those regulations, and I understand that. but it's not going to impair the usefulness of Bitcoin as a monetary inflation. Well, I think that gold served as a store of value because it was hard to produce, and every wealthy person on the planet agreed that gold was the principal fundamental money, right? The gold standard, if you will. 5,000 years of the gold standard, it makes sense. All these things make sense until humanity invents something or engineers something better. Horses, wooden ships, swords, bows and arrows, brick walls, roads, they all made sense until we had airplanes and electricity and modern technology and telephones and the like. So, Bitcoin is, you could think of it as a social network combined with money. If everybody on the planet agreed to put their money on a digital network, the Bitcoin network, and sell their gold, you would have something which had all the benefits of gold, none of the liabilities of gold. That's what's happening right now, right? That's why Bitcoin is up 300% in the last 12 months and gold is up 15%, right? If you wanted a year when gold should have performed, a year of political instability combined with monetary expansion, this is the best year I can remember in my lifetime. When, well, maybe back in the 70s you had something, but in the last 20 or 30 years, this is a year when gold should have performed, but it didn't. And the reason why it didn't is because Bitcoin is digital gold. And when somebody comes along with something better than the 5,000-year-old non-technology or old technology, it replaces it. Now, why is Bitcoin better property? Well, because it's pure monetary property in cyberspace. It has no weight, therefore I can move it at the speed of light. It has no jurisdiction. Gold has to go into a vault in Manhattan or in London, and some bank, some counterparty, and some government has some control. I can't move $1 billion of gold with my head in a few seconds from one side of the planet to the other side of the planet. And so as long as you have mass and locale, the property is going to potentially be impaired. If you had $100 million and you bought land in California, the governor of California has some power over the value of the land. The government can impair the asset. If you take $100 million and you put it in gold and put it in a vault in a bank, they can impair the asset. The government, the governor, the mayor can impair the asset. The laws of physics impair the asset. I can't wiggle my nose and move the gold 1,000,000 times in a split second. The laws of physics control me. With Bitcoin, the government can't impair the asset so easily. The laws of physics don't impair the asset, and software engineering enhances the asset. So if I'm looking for a way to pass monetary energy, money, years in the future, I have to figure out how it's not going to be impaired. And of course, that just means I want the least number of moving parts.
Absolutely. And those are all extremely valid points in regards to Bitcoin. And in regards to the returns, absolutely. Bitcoin's returns, no comparison to gold's. But we also don't see, a 30% correction in a day on the gold front. So again, as a store of wealth for someone who wants to sleep well at night, how do you get over that? Those massive corrections that we just don't see in the gold market.
Yeah.
You brought up gold confiscation. The last time it happened was 1933. Yes, is it something that the US government can still do? Yes, they can. What is the likelihood of that happening again?
Gold confiscation?
Yes. Do you really see that as a reality, that something that could happen again?
I don't think that there's going to be gold confiscation going forward. And I think that what we're going to see happen is that people saw in 2020 that gold wasn't working as a monetary inflation hedge, and Bitcoin is, and they didn't understand the technology. You're going to see people selling their gold and buying Bitcoin. You've got a arbitrage difference, 300% on Bitcoin, 15% on gold. How long are people going to allow the differential interest rate? One currency yields 15% interest, The other currency yields 300% interest. And the only thing anybody has negative to say about it is it's new and it's going up, 10 times faster in a volatile fashion. At some point, people are going to be shorting gold, buying Bitcoin, and it's going to accelerate.
I want to get to some viewer questions now. Michael, I always like to be very interactive with the audience. I asked them to send in questions. I received a ton. So I've just chosen a few here for you. So I want to get through as many as possible. This one comes from actually a guest of our show, Vince Lancy, VBL. He says, is there a place for both Ethereum and Bitcoin? If so, what is the material difference, real or potential, between them?
There's no better risk-adjusted investment idea I can see in this world right now than to buy something everybody needs that's got 95% network dominance, that is engineered specifically for that purpose, that dozens of billion-dollar entities are embracing for that purpose right now.
This one comes to us from Tooth Mechanic. He says, what percentage Bitcoin does Michael recommend for your average retail investor? Does gold still have any place in a retailer's portfolio?
I just can't see why anybody would buy gold. I think gold's going to be demonetized. As the generation that bought gold learns about Bitcoin, and as generational wealth moves to the technologist, I think that Bitcoin is the digital gold. Look, I've got a phrase, diversification is selling the winners to buy the losers. So what portion of your tech portfolio would you invest in Amazon versus the retailers that aren't Amazon, right? It seems like you would have lost on 15,000 retailers, made money on Amazon, and maybe broke even or made a little bit on Walmart. And what portion of your portfolio would you invest in non-Apple stock in the mobile space? And what would you invest in the other search engines instead of Google? And what would you invest in the other social networks instead of Facebook? The diversification away from the winner is diversification to the loser. So take half your portfolio, invest it in gold and get 15%, and the other half invest in Bitcoin and get 300%, and then do that 10 years running, and you pretty much destroy half your money. Like, you'll lose half your wealth.
Bitcoinator asks, does MicroStrategy have a plan B in case Bitcoin drops a lot? Something that I really doubt. Or are they hodling no matter what?
I'm a rational actor, and so I consider what's going on in the world at all times. My view of Bitcoin is it is the highest quality property, or the highest quality asset you can own in the world right now. It's superior to bonds, superior to commercial real estate, superior to equity, superior to gold, to silver, to commodities and derivatives. And that's an easy observation in a world of extreme monetary inflation, with inflation rates of 15% or more expected for the next 5 years. It's easy. If the monetary inflation rate was zero, it would be difficult, and I would have to evaluate the differential coupons, rents, and dividend yields of all those other assets because they're fiat derivatives. And if no one could mine any more gold ever again, and if it wasn't centralized, I would have to consider that. If something changes, and if some other superior technology comes along, we'll figure it out. But right now, I don't see anything superior. So my view is that every time you sell Bitcoin, you're buying an inferior asset. And so you're selling a winner to buy a loser. And given the likely differential rate of price appreciation over the next decade, it would be seriously wealth destroying to diversify out of it.